I want to talk about that because now, with the way the geopolitical situation is very precarious right now globally, how is India positioned according to you? Are we ready? What is the work that India is doing in the defense space? And from an investor POV, where do you see the biggest opportunity now?
This is across the board so far as defense is concerned, because I think with the kind of neighbors that we have and with the all kind of geopolitical situations which is there globally, defense investment will only keep continuing. And this government has been more focused on indigenization. So whether it is, for example, HBL is probably one of the few companies in India, probably the only three companies in India which is certified for electric fuse.
Electric?
Fuse.
Fuels,
These are
okay.
fuses which are used for short range
Fuse, okay.
ammunition, for missiles, for grenades, and multiple other things. Now, like what we waited for Kavach for a good, very long years, we have been waiting for commercial orders to come in. But we know that this has to happen. And this electronic fuses, probably India ends up sourcing close to about 10,000 crores every year. So that's the kind of market opportunity that we're talking about.
India was importing it earlier.
Yeah. So if indigenization has to happen, orders have to be issued at some point in time. It's a matter of time. When does that happen?
So, which are the other spaces within defense where the import substitution theme is
This will be
big?
across the board. I mean, whether you talk of drones, whether you talk of submarines, whether you talk of missiles. So companies like Astra Microwave, Premier Explosives, they're all right up there. So there's huge impetus on import substitution. And this is very, very diversified.
But names like Astra Micro,
Premier Explosives.
Premier Explosives, and all of that are well discovered stories, right?
Yeah.
So the problem in defense is that it's hard to find stocks with cheap valuations right now. Growth stories are there.
If it was so easy to find, undiscovered ideas, then probably everybody would be rich, right? That's where the effort goes. So while Astra Premier have now become very discovered and known ideas, there are many lesser known companies which are doing cutting edge work. There's a very small company that we are working on right now, which is in the shipbuilding space, where they're working on the defense side, they're working on commercial ships, doing some very, very interesting and exciting work. Again, given the small base, they're growing at almost about 40-50% CAGR and can potentially continue to deliver this kind of a growth for at least next 4 or 5 years, basis the kind of visibility we are seeing. It's a relatively lesser known name. Now that's where the wealth creation actually happens.
A fair point, yeah. I mean, identifying stories is the real skill set. But given the way the market is going right now, do you think this is the right time for people to be investing in mid and small caps? From your lens, what is your market view right now?
Absolutely. In fact, like they say, right, the best time to make investment in the market is in midst of all the negativity and anxieties, and probably we are at the prime of those anxieties.
But do you think you can get better levels over the next couple of months or
It's
so?
difficult to assess, right? If we hear a petrol price hike coming up next week, probably we may see good, decent correction coming about, and that may lead to inflation and other worries and so on and so forth. So yeah, maybe 1 or 2 quarters can be bad, but if you are looking to play momentum, then you would be worried. If I'm buying a business from the next 5 year perspective, I may do my position sizing in the right manner. I may start taking some small positions right now, see how the market behaves and reacts, and if I get to buy the same thing 10% cheaper or 15% cheaper, I'll be more happy to buy, because my horizon is next 5 years. I'm not looking at next 2 quarters. These issues, they keep playing out. I mean, it's been 25, 27 years that I've been investing. Not 1 year has gone by where we have not had some of the other anxieties playing out, right? And there is always going to be something or the other. In fact, we keep talking about it, where we are right now. Probably next 2 years, we will be entertained with all kinds of things, and the volatility will continue. But businesses have their own path, right? And they have their own cycles.
Absolutely, yeah. It was really interesting conversation actually, and we've run out of time, but not out of questions. But I want to end by just asking you about, you started your journey at Morgan Stanley. You were telling me, and today you are, sitting with a SEBI registered PMS advisory, and you're kind of generating these huge returns in your 20-25 year journey, 25-30 years. I don't know how much it has been. What are the biggest learnings been for you to become and to to stay consistent as a successful investor is hard, right? To build a brand is easy, but to keep that brand going consistently for 25-30 years is tough. So, what have your biggest learnings been?
Stick to the core disciplines. I think that is the biggest differentiating factor. Especially if you're doing listed markets, there is so much of noise, there's so much of clutter. Every day you get pushed with another 10 new ideas. Now, in midst of that, to be able to sit on an investment for good 7 years, 8 years, allow the businesses to compound, and during that phase, go through certain periods of challenges and downsides and so on and so forth. It requires a lot of discipline, and that's what we've tried to do over the last 13 years. We've tried to perfect our systems, processes, and probably being lazy helps. So that's the kind of investing that we like to do, right? We spend a lot of time before we get into a business. Once we have got into, then it's basically monitoring the business and sticking to the core disciplines.
And for people who say that microcap investing is very high risk, it involves a lot of scams, there's a lot of mis-selling, there's a lot of pump and dump. What would you want to say to them? Because that is a real fear, right? Especially in today's day and age where there are so many avenues where you can reach retail investors. Earlier, there was just television. That's it.
Yeah,
Now,
it's much more
there are
easy. You're
like
absolutely right.
WhatsApp groups and easy to pump and dump.
You are absolutely right, and all of it does happen, and which is why it is important to not follow the stock price. There are a lot of times when the stock prices probably would run up way ahead of the fundamentals in the business, and that's why it is important to understand the business that you're buying and not really look at the stock price as your decision making. So we don't get exuberant to see a stock price 50% up, and neither do we get into a despair if we see it down 20%. We always look at how the business is behaving, whether my balance sheet is intact or do I see deterioration in the balance sheet. Those are the kind of things that we keep questioning and probably look at, rather than looking at the stock price in the short run.
Hmm. Okay, Pawan, we have to do a part two of this because we have many more sectors to discuss, whether it is energy transition, whether it's autos, we have to touch upon that as well. But thank you so much for being with us on the Money Mindset. And hopefully, we'll get to chat with you a lot more in the due course.
Sure, my pleasure. Thank you. Thank you for having me over.
And thank you to all of you for watching.